What is up, everybody? Welcome back to the Russell Journal. My name is Russell, and this is my journal entry for Friday, October 14th, 2022. As you can see, quite the reversal of conditions from yesterday. We took a real bludgeoning in the market. I have titled this thing, the Bull Thesis is dead, and it, from a technical perspective, it really is. There's two sides of this. I argued yesterday that the bulls are no longer arguing for their thesis can no longer be that there is a Fed pivot. I argued this. I believed this to be the case for their argument. Just so you know, this does not mean that I was actually bullish on the market, okay? I'm actually bearish on the market overall. I think that there are some things that have to happen that mathematically don't make any sense, but from a technical perspective and for like other reasons, I think that made yesterday make sense. And today, and I really did hope for more of a move up from the bulls. But there are some things that I didn't, coming into today, we had a lot of really good proof for the idea of a soft landing. You have low unemployment, you have higher inflation, which if you're the Fed raising interest rates, you should want to see higher inflation, right? Right away, the first thing you see when you raise prices is higher prices. So if you're the Fed, seeing those prices come up means that your interest rates are having an effect on prices. So going into today, what I wanted to see was from the retail sales report, which is that sales are slowing, right? And we got zero growth or zero, right? Like the retail sales were down. And from what I saw on Market Watch, I'll pull it up for you guys so we can have some type of record for it. Market calendar. Okay. So yeah, retail sales came in at 0%. Expected was 0.3%, and what what was last month was 0.4%. Okay, so you're flat basically on your retail growth. This is if you are the Fed, this is what you want to see. You want to start to see those sales falling off. Okay, so we're right on it. What we did not expect was from the UMISH consumer sentiment report. Again, this is something you should also want to see, is the consumer sentiment report is coming in down right there. So you should want to see that. If you're the Federal Reserve, those are the things you want to see. You want to see a weakening economy because it means people will either going to have less money, they're going to spend less money, and that inflation is going to come down, okay? And if you are the Fed, you're looking at that going like, okay, those are some pretty drastic changes. It took a while to get there, but maybe, and again, this is not for a Fed pivot. This is for a Fed victory lap, right? The Fed is getting what it wants. Sure, it's happening faster than, June or July, or slower than that. Sure, it's continuing to go up. But as you continue to jump 75 basis points after 75 basis points, that's what you should expect to see. You should expect to see prices come up. You should expect to see sales go down. And then what you should expect to see is prices follow sales. Okay. Again, those were the things that I argued for the bull case. And this is the thing that I'm arguing was that I thought is that if you are a bull, you have to argue for the soft landing. Okay. If that is what you think, that's all you have left. The idea that the Fed is going to pivot and let our currency just be devalued is you can't accept that. And even then, that's even more worse for you, right? It's just bad because sure, your equities go up in value, but your purchasing power from what you make off of those equities is superiorly less. So, if you see guys out there saying that like the bull thesis is the end of is the apocalypse, they're not exactly wrong, right? So, but my thought was there's no way. And if you got all of those reports today, the thing is that like if you're a bull, you should be in like heaven if that's your thesis. The problem here is that it obviously isn't their thesis. Where my bull thesis was that, hey, maybe, right? Maybe they pull off a soft landing. But we're going to go to the charts today. We're going to look. I'm going to say the market is saying nix to that. Okay. So let's run over here and we're going to jump into this. Some other things that I really want to point out too, by the way, like this morning we had, again, it was like, as far as the concept of that bull thesis goes, we had good news. Okay. The everything is looking up for the next bit of inflation, the next reading we get to see a pullback. You are getting everything you need to see inflation actually start coming down. If not in October, absolutely in November. Those sales, those slumping sales in retail tell you that eventually retailers are going to have to buy. And you can go and look at the inventories, right? The wholesale inventories, business inventories. And that's reported on. They're going up. So you're going to have this big stockpile of inventory next to smaller sales. The prices are going to come down. It's going to happen. So again, not that I'm bullish, not that mathematically it has that whole thesis has problems to it. But if you are a bull, that is all you have. The idea of a Fed pivot, like I said, is not. So you get in today, and Putin's talking about coming to the negotiating table. He gets up and talks about how like he's gonna like restrict his troop movement. He gets up, right? The idea that maybe this thing with Ukraine and Putin, from what he talked about this morning, you might be coming into the end of that whole thing with Ukraine. So again, we had a really good shot at the money, right? And this is what I'm talking about. The bulls have a set of money. They have a certain amount of money, and it runs, and when they have a thing that they believe in, they run the tape up, right? And you can see this, like here they believed that interest rates were priced in, they ran it up. Here they believed that the Fed was going to pivot, they ran it up, And so and so you get here down here, and you're thinking, you got a thesis now? And if you have a thesis, it's a soft landing, but nobody thinks it's going to be a soft landing, right? Now I will tell you, it is really easy to come over here and bet short. It is, you could have bought a year out call or year out put dated anywhere in here and just made money. It wouldn't have been that hard. But like to go in, if you're an investor, to go in and go against all of that, right now, that's the hard thing to do. And usually in the long run, that's typically the right thing to do. So there's a piece of me that holds to that, that keeps that in my head. Last year, though, or last couple of years while we're running up there, my whole thought process is like, there's no way, this is stupid, right? This just keeps going up and up and up and up, right? Now, off of here, I didn't think there was a problem, and getting to here, not a big deal. But all the way up there, that was insane to me. That was madness. So anyway, so there's a couple of things we want to look at. This is right now, we are on the weekly chart. We're going to go over the monthly. and we'll take a look at SPY on the monthly. We're going to point out some stuff, okay? We're going to move this up. All right. So this is a bearish candle from what I've heard. It's the least bearish candle, but we got one of those back over here, and it led to this one over here on the monthly. So as of right now, things are not looking super hot for the bulls in the technical perspective. You have a pattern of lower highs, lower lows. You're breaking down. And the reason this line is here is because that is our 200-week EMA, okay? You can see on a monthly right now, we are setting up below that. And when we go over to the weekly, let's go back. Let's get rid of the MA. Let's put on the EMA. You can see that we closed our candle actually is below this line, okay? Below the 200 EMA. I can actually delete that line right now. Okay. So the problem here is when you get these closes below this line will, once you're underneath it, it has been acting as support. You can see 1, 2, 3 weeks. We've kind of tried to hold it. But close underneath that bad baby, get a whole weekly bar under there, and this line becomes resistance. The other thing too is you have been in a secular bull market for the last 4 years, and underneath this line, you enter an actual secular bear market, and you're talking a bear market that can last a couple years, right? If you're a trader, that's your dream. Like if you are a trader, like getting underneath there, that is money every day. Okay. So but like, you know, the one thing that you will the one problem we have here with this candle close under here on a weekly basis is you're really looking at the possibility of capitulation. And the thing is if you know people or have people that you love who are invested in the market, this is going to hurt them. You know, like I have a lot of concern with this. My family is somewhat invested, fairly well invested in stock market, and this close below this line is it really spells bad trouble. Now, again, next week we could see anything happen. You could break above this line and go run away. You know, there is a possibility if you listen to guys like Steve Van Meter believes that the Fed is absolutely going to pivot. I just don't. It's a tough thing. It's a tough call for me because, you know, save stock evaluations and devalue the dollar and even save the bond market. And like, I get that. But what that means for the future is pretty rough. You know, does Powell really have what Volcker's got? Now, there is one saving grace here on the weekly, and that's if we turn on the simple moving average or the daily moving average. And you can see we still have the 200 simple to 200 daily moving average. And you can also see that we did get a bounce right off of that right there. So you have some possibilities. But with that being said, you have this line here making a beeline for this line, and this one is making a beeline for it too. So you get those bearish crossovers. You can see you got this bearish crossover here. And if you get another one, you know, it's really not looking good, especially on the very large time frames. So we're in a lot of trouble. Okay. A couple of other things I wanted to point out to you. So normally I don't bother doing this for people because it's one, they usually tend to fail. But if you look at this right here, and I'll show you, So if you can see how this is moving up into here and it's sort of wedging against that, okay? When we look at the trend on the VIX on the daily, what you can see is not just a trend of higher highs and higher lows. This wedge right here shows that you're flying in what's called breakout formation. And what this is it gathers, it builds up a lot of energy down here. It built, like, a lot of people go short here. A lot of people go long. You can see where they're longing this, right? And it's pushing against this line right here. When this erupts, if it erupts to the upside, it will be a very explosive move. And you're probably pretty close to, like, when that happens, you'll be very close to your capitulation type event. Okay. So we're definitely watching that. Again, we're going to an explosive move up through here and definitely be looking for capitulation. You're not there yet. You still got maybe another day or 2 days and it could happen. Now, again, normally the VIX doesn't capitulate. You don't get capitulation with the VIX below at least 45. So this thing getting an explosive move up here is great. The other thing, so you got your trend up, you got your breakout formation, you have your biases still up. The one thing you have in your benefit here is momentum is still more or less turned down. So, but there is some slight divergences on the chart. See how this has a higher, oh no, that's not a divergence. Where is the divergence? It should be, so that's a lower high, that's a higher high. This is maybe your divergence. You got a lower high here and a higher high here. So you got lower highs down here. You got higher highs on the VIX, lower high there. So there is some divergence, but it more or less resolved back over here. So nope, I guess you don't. I don't see any divergence there. Okay. So trend up, bias up, momentum coming down, but still not great. Again, not a massive awesome candle here, but this is one of the least. This is a bullish candle, but it's one of the least bullish candles there is right there. If you can see where my mouse is at, I'm trying to step back. Let's go to the Bollinger Bands. Your Bollinger Bands aren't really expanding that much. You've got room to 34.85. So it is going to have to, like, really be forceful. There's going to have to be a lot of energy, and you can see 1, 2, 3, 4, 5, 6, it could be another week of this, testing this thing. So it may not happen next week. It may happen sooner or may happen later. Oh, there you go. That's beneficial. So if you go to the weekly, you can look at the bull and you can look at the VIX and you can see that you keep hitting this band, but you keep selling off from it. Right. So nobody, people are willing to play this to make money, but they're not willing to take profit. So it is really interesting to see a red candle on the weekly of the VIX and a red candle on the weekly of the SPY, which is also, let's go look at something. Red, red, red. Red, red, red. You might be going to catch a rally in SPY again, but yeah, I don't know. I have to sit down and look at the actual dates on it. Anyway, so going back to, okay, so that's the VIX. Bias up, trend up, momentum up, turning down. Momentum on the weekly is up. Okay. DXY, let's look at the weekly. Woo! Weekly is pretty obvious. Trend is up. Bias is obviously going to be up. I'm not going to bother to put the 18 on. Momentum embedded on the weekly chart. So you've got embedded momentum. So this has got legs. It's got some opportunity to get up there. It could still close. It could lose that. If it does lose that, chances are you're going to, I will turn the 18 on for this. If you lose that momentum, you're headed back to 108. As of right now, though, it looks like you are going to be safe. So the dollar is going to keep heading up, which could mean stuff for the SPY going down. Okay, back into here on the weekly. All right, trend down, bias down, momentum down. Watch this here next week. They're going to have a hard time because that'll give you, if you close one more week down here, you got an embedded reading. And if you recall the last few times you got embedded readings down here, you haven't had an embedded reading in a while in on the weekly. So you're at, and that's why I talk like you're in trouble. It's because you got an embedded reading on the slow stochastic on the weekly. You've got you're closing below the weekly EMA. You are, the weekly. So you got your two candles down here. 1, 2. One more week down there, and that'll embed. Not that it matters that much. On the daily, this will close back down in here. You got one candle up. There you go. So it goes back in right away tomorrow. Again, it drives me nuts. This thing was really, I just couldn't believe that it did what it did today. If you look at it, this is a 5-minute chart. Just, I legit, it doesn't make any sense to me. I do know that Britain had some problems today, that Liz Truss fired a guy. She slashed her tax cuts. Doesn't sound like the Bank of England really got its stuff together, or like the Bank of England sounds like they followed through. Like they're cutting off the bond buying today for their funds. So I'm not really too sure as to exactly what's going on, as far as all this stuff goes. It doesn't make any sense to me. But the bear market, really quick, I'm going to wrap up with this. Really, and check out look, I'll give you more trade planning on Sunday. That will be a lot better as far as like what our game plan is for next week. Here's this is really it, right? You got higher interest rates, higher costs. Eventually, this is going to lead to higher unemployment. Overall, what it should lead to is lower earnings at some point, and that's really what the big problem here is, that earnings are going to take a hit, and they have to take a hit. And so I honestly, I don't know what to say. You're already all the way down here, and you're about to just go through like one of the worst, you're going to get some of the worst earnings guidance that you've ever seen in your life. So, the fact that this hasn't actually capitulated, I think we're lucky so far. But I think you're pretty close. We'll see going into next week's earnings. On Sunday's show, I'll talk more about it. So make sure you do yourself a favor, like and subscribe to the channel, like the video, subscribe to the channel, go long on that like button. Risk reward is definitely there. So if you can, and how do we wrap this up? Oh, that's right. The Russell Journal is written, edited, hosted by me, Russell Liss. We are produced by Social Media Shows. Our executive producer is Maria Pureza. Give her a check out on social media. Links in the description below. And until Sunday, pretend I said some sort of catchphrase.